Hey guys, we will wait for another 5 minutes and we will start the session. Thank you. Hey guys, warm good evening to everyone. So my name is Chinmay Kale, right? I'm a chartered accountant by profession. I'm basically based out of Bangalore. So I am associated with ClearTax since like more than 7 years. And in today's session, we are exclusively providing the knowledge sharing session in regard to the financials, right? As a financial wellness as a plan. So we are providing the exclusive session to the fortunate HR audiences. So in this particular session, we will be discussing about what are the key things that we have to remember while we are dealing with the filing of the ITR and how to tackle the notices, right? So so what are we going to discuss today? So these are the topics that we are going to cover. So why filing of the income tax on time really matters, right? How it is going to help us in a longer duration. And secondly, we will discuss about what are the common reasons that the notices are issued to one, right? So what mistakes that knowingly or unknowingly that we do, so that can result in the notices. And third one is what are the simple steps or the habits that we can incorporate while we are dealing with the financials or our personal financials, so that we can be like kept outside the radar of the income tax. So there will not be any notices that can be issued, right? So one next one is what are the benefits of being a compliant taxpayer? How it is going to help us in the long run? What kind of the additional benefits apart from being compliant and the law-abiding citizen, what kind of the additional advantage or the uh, benefits that one can avail, right? Next one is how income tax return filing on time boost your financial profile. So how it is going to help us in a very long run, that we will discuss. And what are the quick tips that is to avoid the tax mistakes. So while we are filing the return, what and all the things that we have to be precautionally take care so that we can avoid the tax mistakes. And the last but not the least, we will concentrate upon the what are the key documents that are kept to be ready for the smooth filing season. So we'll discuss on that. And the last 10 to 15 minutes, we'll open the session for the Q&A, where we'll discuss more about the questions or any of the queries that is getting arised, right? So let's not make any delay. So we will directly jump into the session. First one is why filing of the return on time really matters, right? So this is the place where we want to know who are mandatorily required to file the return, right? And how filing of the return can help in saving the tax benefits, right? So how availing the tax benefits, and we will also get to know what and all the penalties that we can avoid, and we will also concentrate on a few of the due dates, which the ITR filing is meant for. We will discuss on that part. Before we jump into that, we'll try to understand the slab rates applicable for the ongoing financial year for which we are going to file the return in the upcoming June or July, right? So these are the slab rates under the new tax regime. So we have a changes earlier. The income slab rates having a differentiation or the intermittent slab rates of very 3 lakh rupees with the incremental tax rates of 5%. Now this slab has been relaxed and it has been increased to 4 lakhs. Every 4 lakh there is an increment of 5% of the taxes. Up to 24 lakh, this raise in the tax rates will be there, and anything above 24 lakhs will be taxable at the rate of 30%. However, under the old tax regime, there are no tax changes as such or the slab rate changes as such. So earlier, how it is same as it is going to be, right? So 2.5 lakh, 5 lakh, 10 lakh are the slabs that we used to follow, and it is continuing to attract. And we have to keep in mind, on top of these tax rates, we have to pay cess at the rate of 4% mandatorily, right? So, and if the income is more than 50 lakh or a 1 crore, we have to pay surcharge of 10% to 15% on top of this, right? So apart from that, so the tax benefits and the exemptions, we are not going to talk about that. So we will talk about now who should file the ITR mandatorily as per the law, right? So it is mandatorily for the one to file the return if the income crosses the basic exemption limit. Under the new tax regime, 4 lakhs is the basic exemption limit, whereas under the old tax regime, 2.5 lakh is the basic exemption limit. If you are like breaching this, or if the income is more than this particular basic exemption limit, then it is mandatory for you to file the return. It is need not necessary always there has been a refund to you or there has to be a tax to be paid to the government. It is not the case. If your income is more than 4 lakh, it is mandatorily for you to file the return. This has to be kept in mind. So few people will tell that my income is rupees 10 lakhs from salary and another 1 lakh I earn from other sources. So my income is below 12 lakh. There is no TDS has been deducted. Why should I file the return? What is the benefit I'm going to get by filing the return? It is not about having the benefit. It is about like complying with the law, right? Law says that if the income is more than 4 lakh, you have to mandatorily file the return. So you have to simply choose the ITR one and you can simply upload your form 16 in the clear tax portal and automatically the rest of the things will be taken care of, right? So this is something that we have to keep in mind while we are doing the ITR filing. The myth saying that there is no refund or there is no tax due or there is no TDS has been deducted, why should I file the return, should not be considered. So we have to be like serious about filing the return. By any chance, if you are depositing the cash in your bank accounts exceeding the prescribed limits, the current prescribed limit is 10 lakh rupees. If you're depositing the cash or if you're like withdrawing the cash in your bank account more than 10 lakh rupees, then it is mandatory for you to file the income tax return. And if you are like spending more than 2 lakhs on a foreign travel during the financial year, even though you do not have any income sources, you have to declare the nil income tax return as per the law. And if you are paying any electricity bill annually in excess of 1 lakh rupees, so generally being a household or the residential user, our household bill will be ranging from like not more than 1,000 bucks, right? So it can range up to max of 2,000, not more than that. In those cases, all of a sudden, if it crosses 1 lakh, something is fishy is going on in your place. So before the income tax, people like determines you or touches you, better to file your income tax return well in before, right? If the total TDS or a TCS cumulatively, if it is more than 25,000 or more, in case of the senior citizen, it is 50,000, then it is also mandatory to file your return. If you are a business person, not an employee or a corporate employee or a person in service, if you are running your own business or a profession, if your income or annual revenue, it is not the profit part, annual billing or the annual revenue, if it exceeds more than 60 lakh rupees in a financial year or 10 lakh in case of a profession, you have to mandatorily file your return. This has to be mandatorily complied. If you do not comply with this, you will be like considered as person who has not complied with the Income Tax Act. The action may be taken against you, or the notice can be issued for putting the complete tax on your whatever the bank credits that happened. Better to declare on your, right? So next, in the next slide, we will be concentrating on like how the filing of the income tax return on time is going to help us, right? So let's start with the most important question. Why does the deadline even matter if the employer already deducted the TDS? So the people will be questioning this, right? So we have seen this practical question when we do the filing of the return. So already my salary is automatically taken care in the form of TDS. Again, why have to report the same back in the ITR? So reporting, getting the TDS deducted and it is getting reported in the form 16, it is the duty of the employer to the employee, towards the employee. It is not employees or being a PAN holder, my being an assessee or a taxpayer. It is my duty to declare my income on a self-assessment basis to the government. So my duty we have to fulfill by filing the ITR, right? So this is the TDS has been deducted. There is no requirement to do the filing. This is a common misconception. So TDS deduction does not equal to filing of your return. You still need to file your return, right? So what are the consequences of not filing the return on time, or rather like what is the consequences of late filing of the return? First one is the late filing fee. If your income is up to 5 lakh rupees, the 234F, there will be a late filing fees of 1,000 rupees. If your income is more than 5 lakh rupees, the late filing fees of 5,000 has to be paid, right? This is a flat penalty. There is no reduction in that or no relaxation in that. This has to be paid, right? Better to file the return within the due date. So interest on the unpaid tax. If you have like generally on the salary, if you are receiving the TDS is automatically taken care. But if you have any other source of income in the form of interest on your savings bank interest or a FD or a RD or a dividend income, capital gains, so they are required to pay additional taxes. On the interest on the unpaid taxes, every month, 1% per month from starting from April till the time you file the return, it will be levied. So it can be proved very costly to you, right? So you better to pay the taxes on these amount on advance tax basis or before the filing of the return if you choose to do so. So there will not be any interest on the section 234A. right? So cannot carry forward the capital loss or a business loss. Say that during the financial year, if you have incurred any of the capital gain losses, or if you have in the business you are running and you are incurred a losses, it is if you file without filing of the return, it cannot be carried forward to the future years. That option is there in the income tax. If you have incurred any losses in the financial year, by filing the return, you can declare it. And in the future years, this loss can cover your profit part. So in the future days, if you are going to earn the long-term capital gains or a short-term capital gains or a business income or a professional profit, in those cases, whatever the current year income or the losses is there will get set off against the future profit. That option is there. You can make best use of that. Last opportunity to file the revised return. Say that if you have done any of the mistake, right? So while you are doing the filing of the return, so you can do the revision with the ample amount of time. Say that so you will be having the due date to file the return generally in the 31st of July, and you will be provided the revision option till 31st of December. So if you missed out to file the return by 31st of July, right, the time opportunity for you to file the revision return will get reduced. If you start waiting for 31st of December to file the return with the due dates and all with the penalty and all the interest part, so if you still commit a mistake, then the window may not be there in order to do the correction of the whatever the return mistakes that you have committed in the original return. So better to do the filing earlier. So if there are any omissions or the mistakes are there, that can be rectified easily. Delayed refunds. So if you file the return before the due date, the processing of the return generally happens within a month or so, or couple of months. Better, like this time it was a kind of a drastic delay was there, but generally all your return will get processed within 90 days of time. The later you file the return, the refund process will get delayed, and the chances of losing the interest on the refunds that you get will also be there. So better to file the return within the due date. Possible scrutiny or the best judgment practices. If you totally missed out to file the return, right, and you have a good amount of income that you get captured in your AS portal or bank accounts, the chances of the department questioning these particular transactions can be higher, which can result in a scrutiny or a best judgment assessment. The consequences of facing those is becomes very cumbersome process rather than self-declaring the returns in the ITR within the time, right? So key dates for the assessment year 26-27, that is for the financial year 25-26. First one is 31st of July, that is the ITR filing deadline for the non-tax audit cases. This is without the penalty, you can file the return before this particular due date. And by 31st of December, you will have the opportunity to revise the return and belated return. So these two are the due date that are applicable for the salaried individuals. So if you are running a business or a profession which is having more than 50 lakh or 1 crore of turnover, in those cases tax audit will be applicable. In those cases 31st October will be the due date for you, right? So accordingly you choose the right due dates and the right forms and get the audit done if it is applicable. Otherwise you have to file the return before 31st of July, right? This is the key importance of filing of the return on time, right? So please keep in mind. Next one is, what are the common reasons why the notice are being issued, right? Many people will rush to us post filing season or after the December month, right? So to file the return, or I received a show cause notice, I received the clarification notice saying that this much of the interest is there, why can't we add the tax on that? All these notices we are received and we are handling still, right? So what the precautions we have to take, right? Or what are the common reasons that can result in these particular notices? We will discuss on that. First one is, we have filed the return, but still we are receiving the notices means. So then what are the possible reasons? So first one is income mismatch. So you will get the form 16. So directly you will consider your form 16 and you will submit your return, right? So the form 16 itself is not your ITR, right? So you will have other source of income also. At least if you are having one bank account, SB interest will be there for you. You have to declare even if your SB interest that you get on either a monthly, quarterly, or annual basis that you get, right? So you have to make a declaration of that. Or if in the earlier period, if you have received the refund, 100% there will be an interest on the refund will be paid by the income tax. That will also become part of your income. So you have to at least declare that, right? So income mismatch can be one of the prime reason. So you do not consider Form 16 as your ITR, and better to consider all your other source of income, say bank interest, freelancing income, dividend income, capital gain transactions, and consider everything and file a proper return. Second one is the high value transactions. So if you have made any huge amount of cash deposits or purchased the property and you are paying a high credit card bill and making a heavy expenditure in a foreign currency, right? So, and if you have made a large fixed deposits, all these things are getting flagged by the various sources. In case of the FDs, bank will report it. In case of the mutual funds, mutual fund houses will report it. In case of property purchase, sub-register office will report it in. Similarly, for the share capital transactions, SEBI will report it. The department will call you to explain the source of funds for this, right? Even though you do not have any income, simply you are making a deposit in this, the department may call you to explain the source of funds. So if you have a clean ITR by which is substantial enough to say that I have the proper sources which I have declared in the particular return, so that will do the job. Otherwise, you will be in a problematic situation. Next one is the TDS mismatch, right? So you consider everything based on the form 26AS, and the TDS that is getting deducted on your bank deposits may be ignored from your end. In those cases, you have to properly consider your reconcile between the 26AS AS and consider the proper TDS and report the corresponding income also. Non-filing or the rate filing, if you are having the taxable income, that is, as I said, more than 4 lakh of income and do not file the return, the system automatically flags you via third-party data source. Third-party as in all your, as I said, SEBI, the sub-register office, mutual fund houses, all these things, they will report it. So even so, if you have the income above the basic salary, you must file the return, right? So exempt income not shown. Say that generally, if you are an agriculturist and if you are an agricultural income, right? And if you are in a pensioner and if you are receiving the PPF interest, and if you are an investor who is having the long-term capital gain of less than 1.25 lakhs, presuming these interests are exempt, except that these are exempt from taxes, but it doesn't mean that you are not required to report it. So being a PAN holder or being the investor or being a law-abiding citizen, so you have to declare it as an exempt income, and you should be in a position to prove that, okay, in my bank account I have 10 lakh worth of deposits, which is an agricultural income, hence I am having this credit deposited to my bank account. So you will be in a position to declare, and the government will also get to know, okay, 10 lakh is related to agricultural income, let's not ask any questions. Otherwise, if you do not even file the return, from where the money came in, right? So if you do not have any proper proof saying that this is actually a source from the agriculture, you may end up in a troubling situation when the scrutiny notices have been issued, right? So these are the various common reasons for which the notices can be issued for you, right? So what are the precautions that we can take, in order to avoid these kind of notices? How can we overcome? Right? So let's discuss on that in the next part. So what are the simple habits to stay notice free, right? The first one is before you file the return, generally in the April or May month, department will release the ITR forms. ITR 1, 2, 3, 4, they will release the forms. The moment the forms are released, don't jump in and file the return. So wait for the AAS portal to get updated. Generally, 31st of May, right? 31st of May, once the financial year gets over, 31st May will be the due date for the various departmental sources to report the PAN level data to the income tax department. Say for SEBI and the bank people will have the 31st of May due date. So within next 10 days, by June 10th, the AAS portal will be updated with the realistic data or the actual data. So wait for the June 10th to come, and once you have the Form 16 handy with you and verify all the details, and then you start filing the return. The moment you get the Form 16, few employers, what they will do the compliance early and they will issue the Form 16 in the early week of May itself. In that case, if you immediately file the return and later the return will get processed probably in the month of August or September, in that cases, they will verify the return against your AAS and the questions can be asked or the notices may be issued because of the mismatch. So wait till the June 10th to complete, and then by 15th or 20th, you can file the return peacefully. Next one is reconcile the Form 26 as. This is the very critical part. Whenever the TDS is getting deducted against your income. The TDS can be deducted not only against your salary. It can be deducted against your dividend income, fixed deposits. If you are receiving any rental income from the commercial space, against that can also get deducted. If you are purchasing the property, you will be required to do the TDS. If you are selling the property, TDS may get deducted. All these transactions will be reported in the Form 26A, and make sure that all these entries that are appearing in the 26A should be made part of the return in the respective schedules, so that appropriately it will be disclosed, so that there will not be any difference between the Form 26A. If there are any mistakes are there or any of the things to be rectified, immediately raise the grievance to the income tax department or the party who has reported the details incorrectly, so that it can be rectified and you can smoothly file the return within the due date. File early, not a last minute. So as I said, do not do very early also, right? So I will and also do not have the tendency only of filing, I will file in the last moment, right? This is how the mistake happens. In the last minute, you will be in a juggle. You will be, if you come across any of the problematic situation, the expert may be busy for you, right? They will not be able to provide the proper time. So go and reach out to your expert very early, probably in the last week of May, and book their slots for filing of the return in the second or a third week of June, so that sit together, like spend 1 or 2 hours of time, get your all the queries resolved and properly file your return, right? Make sure that everything will happen without any hassle. Otherwise, the last minute you will be like in a panic mode. They will also be busy in filing the other return. They may not be give you proper guidance, or without the proper expert assessment, you will be doing your own filing and may end up committing the mistakes. Try to avoid that. Report all your income, whether they are taxable or exempt, right? So all your capital gains, short-term capital gains, cryptocurrency transactions, interest on FDs. So everything you have to report properly. And even if you have like any of the investment in the foreign markets, right? So via Ind Money or a vested app, like you may be reporting they may be invested in the US market. In those cases, Schedule FA will become mandatory for you. And if you are like selling those shares or receiving any of the dividend income from those shares, you will be required to report the same in the Schedule FSA, that is the foreign source income, right? So make sure that you report all your income without missing on anything. Keep 6-year track records, right? So the moment you file the return and the refund has been issued or the confirmation has been provided by the government, the return has been processed and there is no additional demand or refund has been paid to you, that is not the end of the story, right? If the department is having any doubt, so because of any of the evidences that they have, they can issue a notice for you to reopen your case anytime for the 6 years from the end of that particular financial year. So make sure that all the base data based on which you have filed the return, keep it handy with you, so that it may require to be like submitted if the department asks for or the calls for. So department is having the liberty to ask the same till the end of 6 year, and it can prolong later once the notice has been issued. So better to keep your 6-year data at least. Use a CA or a reliable professional for filing your return. So everybody will not be like able to understand the tax part in a simplest manner. If you are a professional who is concentrated on the software development, or if you are like agriculturist, or if you are doing any other sort of non-tax related work, right? In those cases, these may be seems complicated to you. So consult a CA and hire a CA and get your work done with a reliable professional. Do not go with any of the random people who will tell you, I will give you like 30, I will give you like this much of a refund and you give me the commission based upon that. Don't go with that. And also do not go with anybody who will be telling you, I will give you political contribution up to the tune of 5 lakh rupees. I will balance amount, I will give you back in cash. All those things will result in the future days for the scrutiny, and the questions will be asked for sure, right? So go to the reliable professional and check the reliability of the reviews in the market, then only go with that, right? So with this, these are the various the 6 places which can like easily are the 6 habits, I can say, before you file the return or during the filing season, that you can incorporate in your filing the returns, so that you can avoid the notices. And we'll just go through the what are the various types of the notices that one can receive. So first one is the defective notices. If your filed return is not in sync with the form 26 AS, right? Or if you're like all the schedules which are applicable to you are not properly filled. In those cases, the department can consider your return as defective and issue a notice, and you will have a window of 15 days to rectify this. If you fail to do so, your return will be turned as invalid. You need to file a fresh return altogether. So if the window is been present, otherwise you will be deemed that you are not filed the return at all. Next one is intimation under section 143(1). In this particular, it is a communication saying that your return has been processed, right? So and they will also tell you like what and all the incomes reductions and the exemptions that you are done, whether it is in comparison with the income tax law wise it is matching or not. In few cases, you would have like deleted the interest component while filing the version return. Then the department will reprocess it using it the law. Actually, what the rules are, then the interest may get added up. So if you are receiving a refund, they will confirm that if there are any additional taxes to be paid, it will be added back to your income and added back to your return, and the demand will be shown to you. Right. So this is the confirmation saying that the return is processed, but how correctly it is processed that you have to verify. If there are any discrepancies are there, you will get to. And the third one is the notice for the inquiry before the assessment. So it is mandatory for the department to give you a notice for asking for the information, asking for rather than a sort of an inquiry. They will say that, okay, we have noticed in your bank account 10 lakhs worth of credit are there, but in your income tax return, you have reported only 4 lakh of income or rather 6 lakh of income. What is the differential you want to give a justification? In those cases, you can tell them, okay, additional 4 lakh rupees I received from my parents for the education purpose or the higher education purpose. And you have to show the proper documentary evidences of the fees paid to the universities or any of the additional platforms. Then in that way, you can justify it. Otherwise, this 142(1) notice may turn into the scrutiny notice or the assessment notice under section 143 or 147. So be cautious whenever you receive any sort of a notices, be ready to answer that. The last one is income escaping assessment. That is something it is to be scared of, right? As I said, the department has to be like can issue the notice up to 6 years, right? So up to 6 years they can issue the notice under this particular section. So here, if the income tax officer, which generally we call it as AO, assessing officer, if he is of the opinion or he is having the material evidence in hand saying that you have filed your return or completely missed to file your return, but it is not in sync with the income that you have. So you have underreported the income or non-reported the income drastically. In those cases, you will issue those notices asking for the detailed explanation, and it can drag for multiple years also. So better you properly incorporate all your return and verify all your bank statement and properly report your income, right? So this is all about the income tax notices that we wanted to discuss at the very high level. And next we will discuss like being a compliant taxpayer, how it is going to boost your financial profile, how it is actually going to benefit you, right? In what terms that we can get the benefit of filing your income tax return. The first one is the visa approvals, right? So if you're like for any of the reason, for the tourism or for visiting your parents or any of your family members, or if you want to venture the foreign employment opportunities, right? If you want to go outside India for the visa approval, ITR for the last 3 years is mandatory. And you have to have a substantiation saying that I am in employment, I am in the business, I am a profession, I am having any of the property in India. So to prove that I will be coming back to the India. So I will not be like if I am moving out of the country, doesn't mean that I will be staying there forever. So I will be coming back to India, and you have to prove that, right? So for the visa approval, like it is mandatory for you to have the ITR in hand. Second one is the carry forward of the losses. As I said, capital gain losses, business losses, any of these losses, right? Capital gain losses can be related to the equity or a mutual funds or any of the immovable properties that you are selling, right? Or in case of the business, if you're doing the losses, filing the return within the due date helps you to carry forward the losses to the next 4 to 8 years. In the next 4 to 8 years, if you do the profit, this loss can get set off so that you are not required to pay the taxes in the future profits. Next one is the easy loan sanctions, right? Home loan limits are higher when the ITRs have been showing a stable income. So whenever you are having a proper track record with the proper income source that has been provided, banks will give you much weightage, right? So many people will come to us saying that I need to obtain a housing loan, please file my last 3 years ITR. So sometimes out of the no other options that we are left out, like we'll be filing the return like all at once. So since they are filing the return after the due date, one thing is that they have to pay the late filing fees, interest, and the tax due at all at once for all the 3 years, which can be proved very hefty for them. And also the bank will treat that, okay, only for the loan purpose these guys are filing the return. Otherwise, they wouldn't have filed the return. Your financial credibility may go low, right? So the bank may not be give you the attractive rate of interest or the full eligibility of the complete loan. Maybe like as per the standard, if the bank is providing 85% of the total house value for the loan purpose, they may end up getting only 60 or 70%. So they over there you may lose the credibility. And next one is the claim of the TDS refunds. So proper TDS refunds along with the interest. If you do the filing within the due date, till the time you get the refund from the April month to the end of till the date you receive the refund for all the months, you will get the refund at the rate of 0.5%. Otherwise, if you missed out to file the return within the due date, after the due date, if you are filing the return, the moment you file the return till the date of the refund, you will get the refund. So April to till the date of the filing of the return, you may lose the interest on that. Second one and the last one is the proof of income. So ITR is most universally accepted income proof, right? So for the rentals, insurance, government tenders, and the court proceedings, it will be treated as proper income proof. Peace of mind. So no fear of like having the surprise notices or any of the scrutiny investigations, Black Money Act investigations from your end. If you have like properly filed your return by declaring all your income, a clean tax record is the significant life stress can be eliminated with that, right? So these are the benefits of being a tax compliant person. Next one is what are the tax tips to avoid the tax mistakes. So we have bifurcated the entire mistakes that should be avoided in a 3 segments: pre-filing, post-filing, and during the filing. So before you start filing the return, you start preparing all your documents, right? So if you are like change the employment during the financial year, right? So collect all the form 16 from the previous employment and make sure that while you file the return, all these employment income have been reported. It doesn't mean that at the last form 16 I will only report that, because your bank is getting credited with the salary every month, right? Or whatever the employment duration that you have done, all the months salary have been created for those years, for those months you have to properly declare it. And as I said, form 16 is not your ITR, right? So you have to make sure that you have to reconcile with your AS, 26 AS and the bank statements, and make sure that you incorporate all your return and you prepare the ITR. During the filing season, so as I said, do not ignore the AS entries. If you find any of the AS entries are incorrect, respond it online. The option is there, this particular entry is not, it doesn't belong to me. It will go back to the source person and they have to correct it, right? So, and it should not happen that even genuinely if it belongs to you and if you respond that it doesn't belong to you, right? And the source again can send back to you saying that this is the right thing. So again the ball will be on your court itself. So properly respond to it, and if it is actually belonging to you, and respond to it and make it part of your return, right? So ignoring the discrepancies between the AS and your ITR can trigger the scrutiny for sure. Choose the correct ITR and the regime, double check the deduction claims, right? If you are like proper, so in case of the capital gains, you have to choose ITR 2. If you have by mistakenly filed the ITR 1 without showing that, it can result in the data misreporting to the income tax portal. And the tax regime, though it is very critical to know, if you are planning to choose for the old tax regime, you have to file the return within the due date mandatorily. Otherwise, you have to mandatorily, you are required to switch to the new tax regime, even though that you have done the investments and everything will go for a vain, right? So make sure that if you want to get the maximum out of the old tax regime, because only the deductions and the exemptions can be claimed under the old tax regime itself nowadays, right? So mandatorily you have to file the return within the due date. Double check the deductions. It should not happen that form 16 has already provided the deductions and you are doubly claiming it. So it should not happen, because Form 16, if it is already provided, means it is not should not be claimed again, because at the PAN level you will be filing a single return, and over the multiple Form 16 also the same deduction has been repeated. You have to confine it to one. And declare the mandatory information, all your bank account details, and if your income is more than a CR, you have to report all your assets and liabilities. If you are having any foreign bank accounts or the foreign assets or any of the foreign beneficiary accounts, you have to report it in the Schedule FA, that is the foreign assets. As I said, foreign source income, that is the FSI, you have to report it if you are having any capital gains or a rental income or interest income or any of the capital gain sales if you have made, you have to report. Post filing of the season, filing of the return in the income tax portal is not the end of the process, right? So you must e-verify the return within 30 days of submitting your return. So using the Aadhaar OTP or a EVC or a digital signature, multiple option is there. Aadhaar OTP is the simplest way. So within a single click, you will receive the OTP on the Aadhaar registered mobile number, time it and complete it, right? So, and after that, if by any chance after doing everything on compliance, the notices is something is not cannot be avoidable, right? So if you are like getting the notices, do not get scared. If you are able to handle the notices, you provide the proper reply with the supporting documents. If you are not able to provide the reply, not able to understand the notices, then you reach out to the expert so that he can help you over there. So these are the quick tips to avoid the tax mistakes that one has to take care. So the next topic is what are the documents that has to be kept ready for the smooth filing season. So the first one is all your identities and the basic, right? So basic part we have to take care. First one is your PAN is required to be linked with the Aadhaar and all your bank accounts, so that all the proper transaction is getting reported. If it is PAN is not linked to the Aadhaar, your refund will be get stuck and you will not be able to file the return, right? And the listing of the PAN and the listing of the PAN with the bank accounts, linking of the PAN. So without that, you will not be able to get the refund to your bank account. And details of all your bank accounts, right? So along with the account number and the IFSC code, you have to punch in the portal. The next one is mobile number linked to the Aadhaar, because that is the very requirement in order to complete the e-filing process or the e-verification process. And all your documents, right? So income related documents such as your Form 16, 16A, 26AS, AAS, right? Pay slips. If you are doing the freelance income, the money credited to the bank statement has to be properly collected. And investment proof. If you are like claiming the benefits of the old tax regime, all your exemptions, donations, investment proof in relation to the LIC, PPF, ELSS, right? NPS contributions, donation receipt, health insurance policies, all these things has to be properly taken care. And property and loans, if you have any loan certificate, loan that is eligible for the deduction up to rupees 2 lakh under the old tax regime, you have to get the housing loan certificate. Similarly, if you are having the education loan, interest loan certificates of the loan. And if you are like claiming the HRA exemptions, the rent receipts, the rent agreement, PAN of the landlord, right? If you are selling any of the property, so sale deed, and if they are like getting the benefit of the capital gains, the investment proofs, right? So if you are making the investment in the capital gain account scheme, the proof of that has to be properly kept. Either it can be kept it in the digital format or it can be kept in the physical format as per your convenience. There is no hard and fast rule saying that everything has to be kept in physical. Digital proof will also do. Financial statements, that is the bank passbook and the bank statements, right? Fixed deposit interest certificates and the Form 26AS and the annual information copy in the PDF format, better to preserve them. The government portal may go down at any point of time because of any of the technical glitches, right? So better to keep a copy of that. Special cases. So if you are investing in the foreign shares or a ESOP you are getting, and the vesting schedules, right? And if you are receiving any of the notices or the demand orders, keep a copy of that, so that whatever the reply that has been given to that, keep a copy along with the report itself or the notice copy itself, so that it will act as a proof. So you can keep everything in digital format. There is no compulsory to keep them in the physical format itself. So today, we have discussed most of the things that are related to the ITR filing, the ITR filing part, what kind of the documents we have to be kept free, right? What are the possible reasons to get the notices, right? And what are the various types of the notices what can be received, and what are the quick tips in order to avoid the notices, and what are the cautions we have to take in order to file the smooth filing. So that's it for the today's session. So with by doing saying so, we will open up the session for the Q&A. So if you have any questions or anything, you please put it in the chat box. I will take them up. And if you have any one person need to openly like verbally ask the question, they can raise your hand. I can happy to answer them. Right. Okay, so I can see like two questions on the NPS part. So is the NPS investment is eligible under the old tax regime or the NPS new tax regime? So, okay, this is something related to the investment. So NPS, if you are doing, there can be like two sort of the NPS contribution. One is from the employee angle, and second one is the employer angle. From the employer angle, if you are doing the generally like NPS has been opted as a part of the organization as being as a part of the employment means. So employee contribution will be eligible under the 1.5 lakh limit itself. So if your already ATC limit is exhausted to 1.5 lakh, it is of no use. But the employer contribution to the NPS scheme, it will be eligible under both the regimes. This is very interesting. Yes. So employer contribution to NPS, it can be eligible for both the regimes. And but under the old tax regime, it is restricted to 10% of your basic salary, whereas under the new tax regime, up to 14% of the benefit it can be claimed. And if you are like outside the employment, if you are contributing to the NPS under the old tax regime, up to 50,000, you can claim the benefit additionally over and above 1.5 lakh. Right? This is all about the NPS. And the second question is related to the NPS Vatsalya scheme. Okay, so this is NPS Vatsalya is something related to the NPS that can be taken on the children's. Yes, the pension scheme can be taken on the children's also. So if they are at the very beginning, if they are newly born or below the age of 5 or 10 years, the NPS can be taken for their education or the future expenditure purpose. And after the 18 years, it is allowed to be partially withdrawal option is there. And after 21 years, so up to 20% can be withdrawn lump sum and 80% can be withdrawn as an annuity over a period of 5 to 10 years. That option is available. You can visit the NPS Vatsalya, that's this central government backed up scheme. You will get to know more. Right. So yeah, so I don't think so. We don't have most of the questions. Okay, so yeah, so we will be nearing to the end now. So I will be like thanking you for thanking all the audiences who have attended today's session. So we have conducted this particular session in collaboration with the Opportunate HR. So ClearTax will thank you everyone for providing this opportunity. If anybody is having any sort of a doubt or any of the expert advice is required, feel free to reach out to the cleartax.in/services page where you will get to know like what and all the expert assisted plans and the do-it-yourself plans are there. And if you have any of the direct consultations required, feel free to write it on services@cleartax.in or the support@cleartax.in. Our curated experts will be there who are happy to help you for any kind of financial needs, right? So by doing so, like we will be like ending up this session. So thank you one and all for this wonderful evening. Have a pleasant day, right? Thank you. Namaste.